Welcome to the Explainer. So let's get right into it. We're tackling one of the biggest questions in all of finance. Can you actually beat the market? When you see someone make an absolute fortune, is that skill? Is it just pure dumb luck? Or is there something else going on entirely?
All right, here's how we're going to break this down. First, we'll dig into that central question. Then we'll get into the classic random walk theory. After that, we'll look at some real-world evidence that really shakes things up. We'll even search for some hidden factors that could be at play. And finally, we'll talk about why this whole debate matters to you and me.
Okay, let's jump right in with the big one, the central question. Really think about it. Can your skill, your analysis, or maybe some secret knowledge you have, can it really give you an edge? Or are we all just playing a giant game of chance? This question creates a huge split. On one side, you've got the classic academic view, which basically says stock prices are totally random and unpredictable. But on the other side, well, that's the investor's dream, right? The idea that you can find a secret pattern, that you can crack the code and get rich. So, to really get a grip on that academic side of things, we've got to talk about the random walk theory. It's the classic theory that says prices are just unpredictable. Okay, so this whole idea comes from something called the efficient market hypothesis, or EMH for short. It was put forward by Eugene Fama, and the core idea is pretty simple. In an efficient market, a stock's price already reflects everything we know about it. All the news, all the reports, all the gossip, it's all baked right into the price. So there are no easy wins, no hidden gems just sitting there waiting for you to find. Now, this theory actually comes in three flavors. There's the weak form, the semi-strong form, and the strong form. We're going to focus on the weak form because it's the one that gets tested the most. And its claim is, well, it's pretty bold. It says that all those charts of past prices, totally useless for predicting future prices. So if this is true, that whole world of technical analysis is basically a waste of time. Right, so here's the kicker. If prices already reflect everything we know, what makes them move? Well, only new information. And new information by its very nature is unpredictable. You can't see it coming. This is what creates that pattern that looks completely random, what they call a random walk.
Okay, so that's a really powerful theory. But does it actually hold up when we look at the real world? Let's dig into a huge study of the London Stock Exchange that put this whole idea to the test.
So in 2017, researchers did something pretty ambitious. They took 326 stocks from the London Stock Exchange and analyzed them over a massive 36-year period. We're talking 1980 all the way to 2016. They looked at daily, weekly, and monthly prices to answer one question. Are these movements really random?
And this is where the story takes a twist. The findings? They were mixed. In fact, they were completely contradictory. It wasn't a simple yes or no. The answer was basically, it depends on how you ask the question. Check this out. It's fascinating. When the researchers used one set of statistical tests, let's call them the parametric ones, they found that for most stocks, the random walk hypothesis held up. The market looked efficient. But when they used a different set of tests, the non-parametric ones, they got the complete opposite result. The majority of stocks did not follow a random walk, which suggests the market is actually inefficient. Same data, two totally different conclusions.
So what does this contradiction mean? It kind of suggests that maybe we're asking the wrong question. Maybe it's not a simple yes, it's random, or no, it's not. Maybe there's something else going on, some hidden factors that are driving these returns. And that's exactly what led to a new way of thinking. This was pioneered, funny enough, by Eugene Fama again, but this time with his colleague Kenneth French. They basically said, okay, maybe we need to look beyond just the overall market. What if there are other risk factors that explain why some stocks outperform others? And that gave us the famous Fama-French multi-factor model. It starts with the overall market risk, sure, but then they added other factors. First, there's size, the idea that smaller companies tend to outperform bigger ones. Then there's value, where stocks that are cheap compared to their book value tend to do better. Then they added profitability. Makes sense, right? More profitable firms tend to outperform. And finally, investment. Companies that invest more conservatively tend to beat the ones that are super aggressive with their spending. These are the hidden factors they were looking for. Okay, I know this can all seem a little academic, a bunch of theories and models, but why does this debate actually matter? Well, it has huge implications for how the entire global economy works.
I mean, think about how much our financial system has changed. It all started with regional trade. Then, during the Age of Discovery, things shifted to the Atlantic. In the 18th and 19th centuries, Britain became a global financial powerhouse, and we got the London Stock Exchange. After World War II, the US dollar took over. And now? Now we're in this hyper-connected, volatile global system where a problem in one corner of the world can cause a tidal wave everywhere else in seconds. And here's the thing. Today, information, and yeah, misinformation, moves at the speed of light. That makes the line between an efficient market and just a reactive one incredibly blurry. Is the market actually processing information rationally, or is it just freaking out over the latest tweet or headline? It's getting harder and harder to tell. So, that leaves us with this big, lingering question. In this new age of AI and instant data, what happens next? Will markets become perfectly efficient, with computers figuring everything out instantly, making it impossible to get an edge? Or will we just find new anomalies, new strange patterns created by our own human quirks and amplified by all this tech? It's a fascinating thought, and it means this great debate, well, it's a long way from being settled.